Did you know that over the past decade, gold has outperformed silver by more than 50%? That's right. Despite their close relationship, these two metals have shown strikingly different investment returns. Welcome back to the channel. Today, we're diving deep into the silver versus gold debate. Both metals have rich histories and play crucial roles in today's market. But with the landscape shifting in 2024, how do you choose which one to invest in? Let's break it down by looking at 10 key factors: industrial usage, scarcity, investor demand, price, supply factors, long-term price trends, investor desirability, central bank policies, inflation, interest rates, geopolitical events, and currency fluctuations. 1. Industrial usage. Silver is a critical component in various industrial applications. According to the Silver Institute's World Silver Survey 2024, over 50% of silver is used in electronics, solar panels, and medical devices. This high level of industrial demand makes silver's price more volatile, as changes in these industries can lead to significant price swings. For instance, the Institute for Energy Research highlights that advancements in renewable energy technologies, particularly solar panels, could further drive up demand for silver. However, this dependence on industrial use can also lead to price instability if these sectors face downturns or technological shifts. Gold's industrial uses are relatively minor, making up only about 10% of total demand. The World Gold Council notes that gold is predominantly used in jewelry and investment, which helps to stabilize its price compared to silver. According to Forbes, gold's minimal industrial use contributes to its role as a staple investment, as its price is less affected by fluctuations in industrial demand. 2. Scarcity. While silver is more abundant than gold in the Earth's crust, it is still rare in high-quality deposits. The U.S. Geological Survey's Mineral Commodity Summaries 2023 reports that global silver production was around 25,000 metric tons in 2023. However, the search for new high-quality deposits has become increasingly challenging. Mining Weekly points out that the decline in significant silver discoveries could impact future supply and prices, as new major sources of silver are becoming scarce. Gold is significantly rarer than silver. Historically, about 190,000 metric tons of gold have been mined. In 2023, global gold production was around 3,000 metric tons, as noted by the U.S. Geological Survey. The International Gold Council highlights that the rarity of new discoveries and the high costs associated with gold extraction contribute to its high value. As more accessible deposits are exhausted, the scarcity of new gold sources supports its price stability and increase. 3. Investor demand. Investor demand for silver can be quite volatile. During periods of inflation or economic uncertainty, CNBC reports that silver often sees increased interest. However, this demand can lead to significant price fluctuations, as market speculation and changes in industrial demand impact its value. Financial Times also notes that silver's appeal to investors can vary significantly with market conditions, making it less predictable as a long-term investment. Gold is renowned for its stability and is often viewed as a safe haven asset. During financial crises such as the 2008 downturn and the COVID-19 pandemic, gold prices surged as investors sought refuge from market volatility. Bloomberg reports that gold's consistent demand during economic and geopolitical uncertainty supports its stable price trends and long-term value growth. Reuters also confirms that gold's role as a secure investment contributes to its robust demand. 4. Price. Currently trading around $25 per ounce, silver's price is characterized by higher volatility compared to gold. The Silver Institute's Silver Price Trends and Forecasts highlights how fluctuations in industrial demand and market speculation contribute to this volatility. MarketWatch adds that silver's price can experience significant swings due to its sensitivity to both industrial and investor demand. Gold is priced around $1,950 per ounce, reflecting its stability. The World Gold Council notes that gold prices have steadily increased, particularly during times of economic instability. CNBC reports that gold's role as a hedge against inflation and economic uncertainty helps maintain its steady price performance and growth. 5. Supply factors. The supply of silver is influenced by both mining and recycling. According to the Silver Institute, approximately 80% of silver is produced as a byproduct of mining other metals, which can lead to supply disruptions if those markets are affected. Additionally, recycling plays a significant role, though its impact can be inconsistent. Reuters notes that fluctuations in recycling rates can affect the silver supply and market stability. Gold supply is constrained by high extraction costs and declining ore grades. The World Gold Council reports that much of the gold is held in reserves, limiting the available supply for sale. Financial Times highlights that these factors contribute to gold's high value and price stability, as the constrained supply supports its market value. 6. Long-term price trends. The long-term price trend for silver is influenced by its industrial demand and supply constraints. The Silver Institute's long-term price projections for silver suggests that technological advancements and increased industrial applications could drive future price increases. Mining Weekly adds that stabilization in supply challenges and technological advances will be crucial for silver's long-term price trends. Gold's long-term price increase is supported by its rarity and role as an inflation hedge. The International Monetary Fund, IMF, highlights that gold's historical performance, combined with steady demand from central banks, supports its long-term value growth. The World Gold Council confirms that gold's ability to act as a safe haven during economic turmoil contributes to its price stability and growth. MarketWatch reports that gold's value has consistently risen in response to global economic uncertainties. 7. Impact of central bank policies, inflation, interest rates, and geopolitical events. Central bank policies and inflation can indirectly influence silver prices through their impact on broader economic conditions. Inflation often drives investors to precious metals, including silver, as a hedge, though silver's higher volatility can lead to mixed outcomes. The Federal Reserve's interest rate decisions also play a role, as higher rates can strengthen the dollar and reduce demand for non-yielding assets like silver. CNBC discusses how inflationary pressures can increase demand for silver as a hedge, but also lead to volatility. Gold benefits significantly from central bank policies, especially when central banks are net buyers as they increase gold reserves. Inflation also drives gold prices higher as it preserves wealth against currency devaluation. Interest rates impact gold differently than silver. Lower rates typically bolster gold prices because gold does not yield interest. Geopolitical tensions further enhance gold's appeal as a safe haven asset. Bloomberg highlights how gold's price rises in response to geopolitical instability and inflationary periods. 8. Investor desirability. Investor desirability for silver can be less stable due to its dual role as both an industrial and investment metal. While it has potential for high returns, this also comes with greater risk. Market sentiment often sways more dramatically for silver compared to gold, as noted by Financial Times and CNBC. Gold consistently attracts investors due to its status as a safe haven and store of value. Its consistent desirability is driven by its role in preserving wealth during times of economic uncertainty. The World Gold Council and Bloomberg report that gold's stable demand from investors supports its higher price levels and less volatile performance compared to silver. 9. Currency fluctuations. Currency fluctuations have a direct impact on silver prices. As silver is traded in US dollars, a strong dollar can make silver more expensive for foreign buyers, potentially reducing demand and leading to price decreases. Conversely, a weaker dollar can boost silver prices. A report from Kitco News discusses how currency movements influence silver prices, particularly during periods of dollar strength. Gold prices are also affected by currency fluctuations, but in a somewhat different manner. A weaker dollar often drives up gold prices as investors seek to preserve value against inflation. Gold is considered a global currency and often moves inversely to the dollar. A report from CNBC highlights that gold typically rises when the dollar weakens, as it is seen as a hedge against currency devaluation. 10. Long-term price trends. The long-term price trend for silver is influenced by its industrial demand and supply constraints. The Silver Institute's long-term price projections for silver suggests that technological advancements and increased industrial applications could drive future price increases. Mining Weekly adds that stabilization in supply challenges and technological advances will be crucial for silver's long-term price trends. Gold's long-term price increase is supported by its rarity and role as an inflation hedge. The International Monetary Fund highlights that gold's historical performance, combined with steady demand from central banks, supports its long-term value growth. The World Gold Council confirms that gold's ability to act as a safe haven during economic turmoil contributes to its price stability and growth. MarketWatch reports that gold's value has consistently risen in response to global economic. To sum up, both silver and gold offer unique investment opportunities. Silver's industrial uses and potential for high returns come with greater volatility, while gold's stability and role as a safe haven asset make it a solid choice for long-term investors. Central bank policies, inflation, interest rates, geopolitical events, and currency fluctuations all play crucial roles in shaping their price dynamics. Your decision should align with your investment goals and risk tolerance. Drop a comment below on which metal you prefer and be sure to check out our next video. See you next time.